Stacks has a really unique use case for scaling Bitcoin. And well, a lot of people are speculating as to how high Stacks could go in 2025. So I thought it would be good to put together a video and share my 2025 price prediction for Stacks. As I get into today's video, if you do find it useful and informative, smash that like button. If you are new to the channel, subscribe, and let's take a look at what's going on with Stacks. So we're going to start things off by taking a look at Stacks paired up with USDT. We are using the 1-day Binance chart. We're going to be using technical analysis in today's video to kind of give you an idea as to how high, based on the data here, how high Stacks could potentially be going. We're going to be using a couple of tools. We'll be taking a look at Stacks using Elliott Wave, and Elliott Wave is a way of monitoring the behaviors of buyers and sellers when it comes to the market. So we're going to apply Elliott Wave to Stacks. It's going to be tracking the behavior, and basically based on their behavior, you can predict certain outcomes. We're going to be using Elliott Wave in conjunction with the Fibonacci retracement and extension tool. This tool basically tracks people's behavior based on Fibonacci levels. The two go together hand in hand and rely basically based on the kind of high liquidity of a bullish market and low liquidity of a bearish market to predict out future outcomes. Okay, it's quite complex. It's why I put together a whole course on Elliott Wave down over at the 𝗕𝗘𝗪𝗏𝗀𝗀school.com, linked in the description down below. So if you haven't already checked that out, check it out, and you'll learn an awful lot about how to apply this. It's quite complex, so you might get lost a few parts in this video, but ultimately it's a tool that has been very, very accurate, both through bullish markets and through bearish markets. But I do want to stress that Elliott Wave works best in a highly liquid market. If there's a meme coin or an altcoin that has low liquidity, it's not going to be the best at kind of predicting out future outcomes. Okay, but with Stacks we have a reasonable amount of liquidity here, so we should be able to apply some pretty decent logic and predict out where we think things are going. Okay, so in order for us to predict out 2025's price, we need to also predict, actually take a look at the history and see what kind of structures and behaviors we were seeing back in 2020, 2021, 22, 2023, and obviously apply that to going forward in 2024 and 2025, right? So we're going to start things off by taking a look at this stretch from March 2020 up to the bull market high up here in November of 2021. Okay, this is a very interesting path that we saw Stacks taking. Okay, so here we can see a very interesting kind of initial structure with a move to the upside. This move to the upside is what is known as a triple zigzag pattern from an Elliott Wave point of view. Okay, and it obviously comes up higher than the 1-to-1, which will be this little one here, the 1.236, and actually just peaks above the 1.382. And that's how we know that this was not an impulsive 5-wave pattern. So some people might misunderstand this, look through the lens of a 5-wave impulsive pattern like this. That is not correct. What is correct, in fact, is a WXY. We have a WX, Y, X, and Z pattern like so. Okay, and the importance of this Y wave hitting higher than 1.236, we actually hit above 1.382 on the fib scale, tells us that we should have expected an X and a Z wave. Okay, so why is this important? This is important because knowing whether or not there was an uptrend from 2020 to 2021 in an Elliott Wave pattern would be critically important to knowing about 2025. So here there is no trend. This is considered a corrective pattern to the upside, basically indicating that there's a bit of a run to the upside, indicated above the 200 exponential moving average, the white line coming through the chart here, and in line with the rest of the crypto market, but it follows a corrective pattern. The corrective pattern essentially is following the idea of an ABC structure in your W wave, an ABC structure inside your Y wave, and of course an ABC structure right there inside your Z wave, right? So it's a triple zigzag, a zigzag being A, B, and C, and this is wrapped up inside a W, X, Y, X, and Z. I know, like I said, this is overly complicated. Maybe if you're new to kind of Elliott Wave or anyway, anything like that. The main point that I'm talking about here is that from our swing low of March 2020 for Stacks, to the swing high that we had in November of 2021 is corrective. Okay, so although there was a good move to the upside, and I mean it was a very good move to the upside, okay, we saw this run up a total of, if I can snap it on there, let's see if I can, this entire run was 7,472%. That's better than Bitcoin, that's better than Ethereum, that's better than XRP, better than Algorand, better than a few others, I believe. So very, very good returns, but not as good as other main projects that were doing phenomenally well at the time. So not as good as Polygon that did 43,000%, not as good as Cardano's ADA that did 17,000%, right? But it did very well at 7,400%. So the speculation is, can history repeat itself, and do we find ourselves in the same kind of structure? Well, we can start to see a very similar pattern appearing here when it comes to stacks. Okay, so here we have this initial run. There's a slight difference in this though, so we're going to go through that in a second. We can see here that there's a run from November 2022 up to the peak in March 2023, this particular structure right here. This also has then a run to the upside where we did not go higher than 1.236. Okay, so a lot of people look at the history and they say, look, we're doing exactly the same thing, right? We have the run up to the upside. We have the consolidation, the run up, the consolidation, and then the final peak, right? So a lot of people look at the current price action for stacks and say the same thing is occurring, right? We have the initial run to the upside, we have the cooling off, the consolidation, the run to the upside, the cooling off, and then looking for one more peak to the upside, right? Now, they're not wrong, but they are wrong about history repeating itself, because what's going to happen, in my opinion, is something very, very different. What we see here is a zigzag pattern, but it's much bigger than what we had seen previously, right? So we know that from 2020 into 2021, we had a W, X, Y, X, and Z pattern. Over this side, this is not a W, X, Y, X, and Z. That is not what's going on here. Instead, what's occurring for stacks is a B, C structure, and it's completed. Okay, so we had a new all-time high, okay, peaking up here in March of 2024. We've cooled off quite nicely, and this move to the downside has a lot of overlap to it. So again, this is a very corrective pattern, and we've just started to peak up into higher highs on the daily time frame, right? We can see that there, and we're starting to get some lift. So we can see we're getting a bit of lift here. Okay, it's nice. This corrective pattern to the downside, to me, looks like it is complete, and it's complete under the W, X, Y, X, and Z corrective pattern, right? W, X, Y, that's the X and Z if I actually draw it in the correct spot. So we actually have it's actually a zigzag pattern. Sorry, my bad there. It's a zigzag pattern right in here, just a WXY. So as you can kind of see, we finished that correction, and now we're looking for the lift to the upside. The lift to the upside can be any pattern at this point, okay? But there's a high probability that we do look to repeat the performance that we've already had. So we look for this performance from our kind of lows of November 2022 up to the peak of 2023, March 2023. That was a 1,832% move approximately. We go ahead and start thinking about what that might look like. Well, we have a pretty interesting kind of target when it comes to the next kind of big run. Okay, so let's go ahead and draw that in. I'm going to go ahead and just tidy out some of this noise. So based on all of our structures so far for stacks here, we can now be a little bit more predictive over where we think that price action is going to be heading. Like I said, I know this is overly complicated. It can be quite confusing at times, but for the most part, with this correction happening in the middle here, we can see there is a high probability, in my opinion, of stacks rallying up towards 1 to 1.236 on the fib scale. And I'm going to go ahead and just sense check where we are on the low side, because we want to make sure this is as accurate as possible for today's video. So we had a low on the 5th of August. That low was $1.05.6. Okay, so I'm going to go ahead and pull down the Fibonacci chart to $1.05.6, and then we're going to go ahead and move and scale in our little yellow box here to predict out the correct levels, which will be $20.40.3. Okay, $20.40.3 is going to be on the low side, and $41.03.9 on the high side. Okay, so 40.03.9. Okay, so again, we can see there is this really interesting kind of spot right inside here. I'm going to see if I can just snap that right on there to that level. We'll remove the fibs off the chart, and then you can kind of see the scale of what we're talking about. Okay, so in 2020 to 2021, we had a W, X, Y, X, and Z. But what we're tracking right now is actually an ABC structure going up, and a WXY coming down. And we are, in my opinion, going to be looking for another ABC structure to the upside. And this whole thing will be wrapped up as a WXY on a much bigger scale, WXY. Okay, now, if I actually hit the correct one, which would be this one right here, W, X, and Y. Okay, so for stacks, we are looking at a very corrective pattern overall. Okay, WXYXZ to the upside in 2021, and then we're looking for a WXY, which could of course turn into something more like another big WXY, X, and Z pattern at a later date. That's a possible scenario. The other thing that could potentially be going on here is some kind of expanding diagonal. I just don't think that's really what's going on, and for that we'd have to see an extreme move to the upside. Now, in terms of that 7,000% move, is that going to repeat itself? I don't think so. I think we do have some interesting low levels of November 2022, which were coming in at 21 cents flat. Okay, so really interesting kind of stuff there. Let me just go ahead and check to see if that is the exact swing low. Coming in actually is a little bit lower at 21.5. If I drop that down, might even be a little bit lower. Zoom in just a little bit here so we can see on the 14th of November 2022, it was 19.9. Okay, so 19.9. I want to check to see that's what I've got. Yeah, perfect. Okay, so from that kind of point of view of people thinking history is repeating itself, they're not too far wrong. In that particular scenario, you would look for history to repeat itself, not necessarily from the structure, but from the price action. If the price action repeats itself, it's $15.6.2 to $41.79.6. So I don't think it's too far off history repeating itself from the price kind of prediction point of view. But the structures are very, very different. But how we get there is approximately the same. So for me, I think the more conservative area is going to be a nicer area to be aiming for. So we're going to be thinking specifically about anywhere really between $15 and $20 for the conservative target ranges and 40 on the higher side. So that is my price prediction for stacks in 2025. Anywhere really between $15 and $40, but higher probability says between 15 and 20 USD. Now, you can let me know your thoughts and opinions and your price predictions for stacks in the comments down below, or join us in our free Discord server. We would love to get your thoughts and opinions on it. If you found this video helpful, smash that like button. If you are new to the channel, don't forget to subscribe and ring that bell so you never miss another update. And if you haven't done so already, check this video out right here. It's not one you're going to want to miss.